what can you tell us about your background?
Well, I've been an attorney since 2003. I graduated from North Carolina Central in Durham, and my primary focus has been on real estate. So I've been involved in real estate since then, doing real estate closings for people, contract law, things like that. Working with a lot of different lenders, pretty much every lender that's out there. We did a lot of the subprime closings at the time that are now part of this foreclosure mess. We also did a lot of conventional FHA, VA, those type of loans.
Well, given they go to you for help in this area, what would you say their success rate is?
It's very successful right now. It is a lot of time, like I was just saying, but we've had a lot of good experiences so far with clients that we've been able to take care of and help. There's been very few that we've not been able to work with. Most of those are just where their expenses are just so high that it's just something where they may never should have owned that house in the first place. A lot of people that could have been helped in the past by refinances haven't been lately, so that's why they're turning more towards the modification sides for that quick answer. But in general, I mean, we've been able to stop foreclosure sales, we've been able to keep people in their houses, we've been able to lower their payments significantly.
A lot of people are hearing a lot about loan modifications, but they may not know anything about them. How would they determine if this is right for them?
Well, there is some stuff on the web as far as that you can go through as far as, especially with the Obama program that's out and that came out in the beginning of March, where it talks about the qualifications that are needed for this. But in general, the lender's looking to see that you have an income that's going to come back. A lot of people have been laid off. That's temporarily lowered their income to where they can't afford the payment at this point. What the lender wants to see is that that person's actively trying to get a new job, which in most cases they are, but that they have the ability to come back to the old income level. Next thing they're looking at is expenses versus income. They want them to pretty much even out at this point. So even if the person's lost their job, if they can basically be balancing themselves with or without that house payment. So some lenders are looking at it as if they can be on balance between their income expenses without their house payment involved, they'll work with them. Which that's saying a lot. I mean, because if somebody's house payment is $1,000 a month, they can be up to $1,000 in the hole, and the lender will still work with them. But that's really what they're looking for, is they want to see that this is going to be a future success as well. That this isn't a short-term solution where the person may be helped for a couple months, but because these other debts are dragging them down, or these other obligations are hurting them, that they're not going to be able to come out from it. They want to see that this person's going to come out for it. A lot of times they've been looking at, these programs have been for 3 to 5 years, so they're looking at lowering their payment for that long to try to make sure that somebody has the chance to reestablish themselves. Also, the lender's betting that the market will turn around, houses will be worth more, they may have a new job, they can refinance and pull themselves.
And you mentioned that people who are already behind on payments or see a foreclosure in the future. What about people who are feeling the fear of it and actually can see down the road that it's going to be a problem, maybe in a couple months or so?
Yeah, that's a good question. We have several clients right now that are in that kind of situation where they were being proactive. They were laid off, and you still have to have some kind of an economic hardship for the bank to look at it. So there's got to be something that happened to you. Again, whether it's medical problems or laid off, or even just a drop in your income if you were like commission-based or something like that, and that's affected you. But I have several clients that are in that position right now where they've been using their 401k money, they've been using their savings to make these house payments, and they're not behind. And it's interesting how the bank looks at that, because when we talk to the bank about it, the bank is always like, well, how far are they behind, or how much are they in arrears? We're like, none. And that always shocks them, because it's not something that people are used to dealing with on the lender side. They're used to the collection atmosphere of it, of trying to get the money out of somebody. But in this case, I mean, it's something that easily is proactive, and we're going to end up helping the clients that we have that are in that problem right now, because the lender sees this and says, wait a minute, how long can they possibly keep draining their savings? There's going to be a point where that ends. And like I said, there's several clients out there that are now that we're helping with that are at the point where they're still making their payment. They're scrounging through that month. They're making it on the 25th day of the month or the 28th day of the month, but they're making it. And they recognize that they can't keep doing that. You know, maybe a couple months more, but that's it. So that way, if they start the process now, by the time that they may be able to stop that before it gets to the point where it also hurts their credit. because they're in the best position where their credit at this point has not been dinged, it hasn't been hurt. They haven't had those 30, 60, 90-day lates. They're still in a point where when they get a new job, when their circumstances turn around, they're going to be eligible for a refinance. Other people that are 90, 120 days late, their credit has taken such a hit already that may not be something for them.
Great information. Somebody wants some more questions answered. How do they contact you?
They can call me or my associate Avery Bordeaux. Our phone number is 919-866-0965. Or you can go to the website. The website is www.stopforeclosurenc.net. Don't forget the .net part. Stopforeclosurenc.net. There's a lot of question and answer stuff on there. There's other videos that we've posted. There's going to be webinars and seminars that we're going to put on just to try to help anybody that's looking for information on this can help them.
Great. Thank you.
Thanks.